Everyone, and welcome to our 13th webinar in this series, exploring how tax technology can help you. The usual housekeeping, we're going to record today's session. There's an opportunity for questions. Please do ask them via the Q&A. And there will be a follow-up session from today's topic for those that want a deeper dive. And as always, we will be finishing promptly at 10:30 this morning. So on to our main event. I'm Ian Bowden, tax partner and head of BDO's Tax Automation Group, and this series, as hopefully you know by now, explores the art of the possible. All our previous events are now live on our website and via our YouTube channel. I need to start thinking about being that YouTube influencer and asking you to like and subscribe. But on a serious note, if you do have topics you would like us to cover for future events, please do let us know. We're always looking for ways to improve these events and making sure we get you what you need out of them. Today's session is incredibly topical and forms part of our series of events asking the simple question, how was your year end? Hopefully it was better than last year. But if you are still wrestling with Excel, now is definitely the time to take that holistic look. There is so much going on at the moment with Pillar 2 now live, at MTD around the corner, and we can use some of these regulatory changes to help us build that business case. And it is really worth considering these things all together. As always with these sessions, we're joined by a wonderful special guest, and joining us today is Josh from Thomson Reuters. Thomson Reuters is one of the premier tax technology companies and certainly a company that has real coverage in terms of countries and solution. And what makes today's session with Josh even more exciting is that he has joined us while battling COVID. So it probably is best that this is a webinar and not in person, but we really do appreciate you joining from your sick bed this morning, Josh. Just before we jump to Josh, as always with these sessions, we do like to provide a quick market view. And joining me to discuss all things year-end is our head of delivery, Mr. Ian Bacon. Morning.
Morning, everyone. So wanted to start off today and with a fairly bold assumption. I would guess that a number of you on this call still perform your year-end for tax provision and reporting in Excel. Nothing wrong with Excel as a tool. It's served as well. But we're going to look at, is there a potential option to make that better? As you're performing that close process, it's almost certainly that you'll probably be using some kind of tax pack. I would also guess that a large part of your time during the close process that you've probably just been through was spent reconciling PBT from the finance system to those packs. It definitely was for me when I was in your position. Another thing that always used to make my life great was checking out that other line in those tax packs. What the hell was in that line? How could I get that information? Oh, it would have to be an email. And that's exactly the approach that we often see. And then finally, those late submissions are a gift from our finance team. They help us make sure that we're printing off or reproducing the report packs we've already produced for the umpteenth time. Unpopular, given today's focus on software, but most of the above that I've just mentioned could actually be solved with a simple fact of process improvement with Excel. But if it can be solved that way, why should we be using software? Well, the simple answer is stability and scalability. How many times has your Excel file crashed? At that most opportune time, it doesn't open. It's corrupted. You've got to rebuild it. That's your weekend gone. Well, software tools like Thomson Reuters don't generally have this problem. They're built to cope with the volumes of data and the complexity of the calculations and the ability to produce any report that you need on demand. But be under no illusions in this world. If the issues I've mentioned earlier are familiar to you, software alone will not solve your problem. It will only help. Just as critical is how you use it, and to maximize any investment you make in tools to make your life easier, process change will be critical for you, and the benefits that accrue from your software investment will be felt for years to come. And with that, I'd like to pass over to Josh.
Thank you, Ian.
Hopefully it's talking long enough to give us a bit of a chat, John.
No, excellent, good points as well raised there. I think it's quite a short session today, so I'll get kind of straight into it from our side of things. And can I just confirm, because we were just discussing this a moment ago, can you actually see my screen?
We can see a PowerPoint, Josh. Yeah, we've got you.
Excellent. Okay. So my name's Josh Allen. I'm a solution consultant, or senior solution consultant at Thomson Reuters. I've been in this role for about 6 years now, and Ian's just mentioned a few things, which certainly brings back a few memories for myself. I take a lot of pride, to be honest, in helping tax teams improve the tax reporting process, having lived those experiences myself. I thought I'd kick off with just 3 questions, which I don't know if you can put in the chat or maybe just think about yourselves. But whenever I was going through a year-end process, or whenever I came out of it, I would always ask myself, how did I feel about that process? How did it go? How did it make me personally feel? Was I anxious? Did I feel accomplished? What was that main feeling that I would associate with the process? The second was, how do we measure the success of the year-end process as well? Is it reduced prior years? Is it just simply meeting the timelines that we have? Is it seeing that our forecast was more accurate? So what are the metrics that we judge the success by? And then I would be asking myself, okay, what was the biggest cause of that feeling, or the biggest blocker to that success? And it's through asking those 3 basic questions, which you then build on, that I've looked at improving processes over the last 15 years or so that I've been in tax. And I started out in-house, so a big global insurance company, which I'm sure you all know, Aviva, where we primarily use kind of Excel-based processes. And I'd built something using macros and VBA, and was quite proud of what we had achieved. But to many of the things that Ian just mentioned, VBA breaks, Excel falls down. Even with all the VBA in the world, you still have manual elements in that as well. So it still wasn't the ideal, particularly when we look at the scale of the organization and trying to apply it across the group. And then also used technology in the past. So I used some technology reporting solutions going back 6 to 8 years ago. Again, mixed success back then, but I think technology's come on a long way in the last couple of years. And I'll get into why I thought that was a bit of mixed success in the past. That ultimately actually led me to taking a step back from technology for a few years, and I went and joined PwC's compliance team, where I learnt my technical craft. Was doing tax compliance day in, day out as well, before then going back in-house. And when I went back in-house, I couldn't believe that there I was 10 years later, and I was still using Excel, still trying to use VBA to build out these processes. And ultimately, for, in this case, a company that was feeding up to the US, and it just wasn't really working. There was a lot of anxiety in the process. I was getting sent tax packs, which I had no real confidence in the numbers that were being provided to me. And I kind of just found myself sat there going, there's got to be a better way, right? The stuff's got to have moved on. So I asked myself these 3 questions. And I knew from my experience of using OneSource corporate tax quite heavily when I was at PwC, from a tax filing perspective, that, that's a good, solid solution there. And I then thought, well, what else is available? What else does Thomson Reuters have to offer? And for me, when I'm looking at a year-end process, or I'm looking at direct tax as a whole, the thing that I was always trying to achieve, which I refer to as kind of like the Holy Trinity, was having my year-end data, my year-end results be the basis for my tax accounting disclosure notes for the financial statements, and then leveraging that for my final return, and then using my final return to feed into the year-end for return to provision purposes. And I managed to do that a little bit with Excel and bits and pieces of technology in the past, but not the full picture. There was always a point where it broke down. So if you look at corporate tax returns, for the UK at least, and other countries as well, you need to file those in an electronic format. So software needs to come in and be used there. And that's something we're going to see expand globally, but also we've got things like Making Tax Digital as well now for coming in for UK corporate tax. So even if I got the best Excel process for the year end, I'm still then having a duplicate process throughout the rest of the year when I try to get that data into kind of some return software. So it was when I was doing that research and trying to find out, well, how can I join this up? How can we actually achieve this? That I then realized that OneSource actually has a whole suite of applications beyond just corporate tax filing. And those will take you right from the point of sale. So we have things like even vendor, customer due diligence software available, but we have then e-invoicing, our e-invoicing platform that can take data, feed it up into other data applications we have, and ultimately into our compliance and reporting. Now, admittedly, e-invoicing is more on the indirect side, but I'm sure we'll start seeing developments on that for things like direct tax, particularly with making tax digital initiatives as they start taking place globally. But we then have that data and other data which we can use for compliance and reporting purposes as well. And when we look at the OneSource platform, yes, it's got that corporate tax compliance software, which some of you may be using or have experienced in the past, which will file your tax returns. We have this global tax reporting solution. And this is a gap agnostic solution that can be configured to meet reporting requirements at scale for your organization. In addition to that, we have our statutory reporting software as well. So this isn't necessarily a tax software. This is more for the finance teams, but they can use it to prepare management accounts as well as produce the statutory accounts. Now, the fact that all these three applications coexist within one cloud-based platform then means we can start to leverage the data across these processes to really drive synergy, not just in the year-end process, but throughout the year as well. So the more time you get back throughout the year, the more time you have to prepare for the next year-end, and so on as well. So joining the dots is, I think, is a real key driver behind what you should look to achieve when you're looking at your direct tax processes. Now, with a cloud platform, that means we're using cloud-based technology, which means software doesn't have to be installed directly on systems. This again helps with the scalability. It's very likely that a lot of you will have data providers for the year-end process that sit in various geographical locations, okay? And the advantage of cloud technology is that any input, any data that they provide or input into the process is being centralized within that platform and into your provision calculations. So from a group tax perspective, you're not having to send out lots of different Excel packs and collate all that information together manually or with VBA. It's just happening. It's all going in one place to begin with. So it then consolidates up for you for tax purposes. The other thing, when we look at the cloud platform, the technology that we have available now, we can now integrate with systems as well. So whether that's with your consolidation system, your ERP systems, underlying ledger systems, we can integrate with those to have a seamless flow of the data from those into the OneSource platform, where that data can then be used for the year end. It could be repurposed for the stat accounts, for the corporate tax compliance, and so on as well. So we have this integration capability as well. Sitting around that then to help manage the process as well, whether you're the person who's just providing data and you need to know when you need to provide that data, or whether you're someone that's managing the process and you want to know, have people provided the data? Are they working on things? What have we got coming up next? You know, we have these workflow capabilities and sit around all the kind of dedicated solutions to help you manage those processes, help you know when you need to do something, or help you have oversight of the overall process and really bring that all together. So in effect, what we're able to do is have a process where our data comes into the OneSource platform. It is then leveraged by applications such as tax provision to do your global year-end calculations. We can then leverage that data to form the basis of the tax note disclosures for the statutory accounts, as well as feed the data in for them forming the basis of your corporate tax returns as well. And that's a typical kind of customer journey that I've seen over the 6 years I've been here of using these applications together. As Ian mentioned a second ago, we've now got things like Pillar 2, so that story has evolved very much so. And I would say the number one thing that I'm talking about with most people at the moment is Pillar 2 applications and the integration there with our tax provision solution. And again, OneSource offers solutions around international tax matters such as CBCR and Pillar 2, where we have these integrations for seamless flow of the data within those applications. Okay. So, Ian, do keep me honest on time, because I'll probably lose track, and you know I can talk about this stuff forever. So do keep me honest on it.
No, you're looking good, Josh. You got about 10 minutes.
Okay, so what I want to do first off is actually just think about data. We can get into the weeds of provision calculations and automation of the results and things, but the biggest challenge, or the biggest thing that I tend to come across, is always centered around the data. And this actually applies across all those processes, not just the year-end process. You can kind of classify your data into two areas, typically structured, unstructured data. We can get more nuanced than that as well. The challenges that I often hear, particularly from a reporting process, are we have a lot of different systems. We have different charts of accounts. How do we use all this data in an efficient process? And typically when you're doing things maybe in Excel, even with technology, often the simple answers to take from the consolidation system. It's got all your results, it's got your final positions. You can, just bring in that data, whether that's into Excel or technology, to drive the calculations, which is great. But the counter side of that is the consolidation system often loses a lot of granularity, which you need for which you need to get the accuracy in your tax results. So there's always a way up between, or historically it's always been a way up between, do I take from the consolidation system where we can have a very quick, efficient process, or do I take underlying data, which might deliver a more accurate process, but I might then have additional reconciliation checks to do between systems. The reality is, if you're using technology properly, you can do both. Okay, so you can take the data from the underlying systems as well as from the consolidation system. That way you are getting that granularity to drive the accuracy within your calculations, as well as ensuring that you're capturing all adjustments that might be made directly in the consolidation system, such as consolidation adjustments, for example. So use technology to do that heavy lifting for you. Now with OneSource, as I say, we can integrate with systems to bring this in. So that's an efficient pull of the data in. You can do it the old-fashioned way of getting exports of files and uploading those, but I think most organizations I speak to now will look for integration, not necessarily of all systems, but certainly the ones that are providing the bulk of the data. OneSource can ingest that data in any shape or format. We can use functionality to combine it. We can overcome challenges around different charts of accounts by creating master charts of accounts, so the data aligns into that, which can simplify downstream processes as well. But the idea is you bring your data in from these systems, you bring it into one place, and it can then be reused and repurposed across your processes, from the year end to the stats to the compliance as well. Okay, excuse me a second. I'm struggling with COVID. Give me a moment. Okay, so we can take data from different systems. We take away that heavy lifting. What we can also do is get more granular as well. So we can actually take transactional data. So if you think about your year-end process, the typical thing you would do is take a TB. If you're doing an Excel, you might have some links that pick up account codes, automate an adjustment or something based on that. And principally, that's kind of how the technology solutions work as well in their simplest form, and that can then scale out. What we can do though is get more granular in that analysis. So we could actually take transaction data, we can process that, we can auto-analyze it and use the output of that to then feed up into the OneSource solution to deliver more accurate results. So we could get into a lot of detail on this, but to give an example, a recent customer that I've worked with, they were telling us that the year-end process for one of their most material entity, they have a general ledger account code, which is miscellaneous expenses, which is a big red flag to anybody in tax, right? Straight away, you need to look into that. The problem is at the year-end, got increasingly tight timetables, and whereas before they would manually go in and check and do a kind of an assessment, they just didn't have that time anymore. In that account code, they had 7,000 entries, which they were trying to analyze, which is kind of a bit mind-blowing if you're trying to do that on a year-end timetable. So what we did, we asked them, well, how do you do that analysis? They go, well, we look for who's the vendor. We look for keywords in the description. We look at cost center, project codes, okay? And we said, well, we can use technology to automate that process for you. So what we did was design a process that took those 7,000 entries, looked at those flags, categorized them into about 10 categories, some of which were then flagged to be treated automatically as disallowable. One was for kind of new entrants where they might want to go in and do a little bit of digging themselves. But the result was that those 7,000 entries came down to 10. was more sensitized, it would then feed it up into the tax provisioning software, where it would then automate based off that analysis and add back a more accurate number than they would have done if they just, you know, applied a percentage to the account code or something. So we can really get quite granular in terms of the automation. And the thing is, this can all be done in seconds. You can run a workflow which pulls your data from the various systems, does this kind of analysis, processes it up into the OneSource platform, where things like the provision, the corporate tax and the stat account solutions and others will then do their bit, feeding off that information that you're providing. So really get technology to do the heavy lifting for you. The next bit I often then hear around the data bit is, well, if we're taking from different systems, and Ian mentioned this a second ago, I then have to tick back across all those systems to make sure everything's adding up and agreeing. From my different ERP systems, I need to make sure that everything's then agreeing to the consolidation system, to what's then happening within the provision process. Again, though, you can use technology to automate that. So again, on that same client, they were taking data from different systems. What we then designed was a process which pulled through the amounts, the data. It reconciled what they had in their underlying ledger systems to what was in the consolidation system to what was then within the tax provision solution, whether it was PBT, net book values, tax expenses that have been booked. It was checking all these balances across the systems. And it was doing this for that client, I think about 80 entities, but I do know people doing this for around 800 entities. So it shows you the scalability. That analysis was happening automatically. So I know it's like, I've done year end, I've ticked all my Excel pack processes, and then, you know, late into the evening, gone midnight sometimes, I go home, I wake up the next day and I'm worried finance have processed something when they haven't told us, and I then have to go through and tick everything back again. This just does that for me. So that was a huge cause of anxiety. Whether you're just responsible for a handful of entities, it's a pain to do that, or whether you're managing the whole group and trying to get that visibility. So you imagine these checks are happening automatically at scale across your group and can flag to you where there's variances occurring within those. All this is possible through the use of technology. Now, we can also then create additional requests for data, questionnaires, surveys, and so on to capture additional information from data providers that sits outside the systems. Again, that would all be collated centrally within the OneSource platform and will then feed into the applications. So I'm just going to bring up, Ian, can I just check you can see the OneSource platform? You can see my, and I'm not still sharing the slides.
Still sharing the slides, Josh, and you've got about 2 minutes.
2 minutes, okay. So give me a sec. How do I look at that? Right, hopefully now.
Yeah, we've got you.
Yeah, okay, so I've got about 2 minutes. I told you I can talk about this a lot. I think the data bit is crucial though, because we get that right, and we get that automation and that speed of getting the data in, that's going to deliver a lot of the efficiencies. Then what will happen, it will feed up into your provision solution, which is going to automate calculations. Yes, you can still go in and input on top of that information into that, but you will have within your provision process your data coming through. You will be able to see instantly your key metrics across your provision results. So things like your effective tax rate, your tax balances. You can then drill down into this data, see what drove those adjustments, what's the source of the data, any inputs that anyone's made themselves directly, like a local financial controller, as well as then report on that information. So OneSource will then give you the ability to slice and dice your data in numerous different ways to view your reports or to view your reporting outputs in various ways. The key one that I tend to often use is things like the effective tax rate. So typically that's what the auditors were always asking me questions around and the head of tax. Now, if you're trying to work that out through lots of Excel packs, that can be a pain. I know that it's not always easy to do that. Whereas in OneSource, you can simply come in, run your effective tax rate report and point to your head of tax or your auditors exactly what is driving your ETR rate, whether that's for a particular unit, a sub-consolidation, or a consolidation piece as well. And as Ian said, I've only got a couple minutes. I'm going to jump back out of here. Oh, there we go. Just run the report. Hopefully you can see that on the screen. So get the data right, use technology to do the heavy lifting, get data into the system for you. OneSource is then going to automate the calculations based on that and bring that together. You will then be able to get oversight of your results. You will be able to see progress and track that across the group in one place. And then we can leverage that data to flow into things like the statutory disclosure notes and things as well beyond that. We do now have the added complication of Pillar 2 on top of that as well. And as mentioned, we have our Pillar 2 applications from which are, if you're thinking about the year-end provision process, our data, our tax expense data, deferred tax, current tax information will flow up into that. It will calculate your top-up tax. It will generate the results from that to feed back into your provision results, into OneSource tax provision, which can also then post journals and things back into your system. I think one thing I would just point out on our Pillar 2 application is whilst everyone's focused at the moment on the reporting side of it, we do have the local country calculations built in there for QDMTT purposes, which will also impact IIR as well. So it's not just an OECD high-level calculation, it does the local country calculations as well. And we also then have the compliance piece as well to enable you to file with the authorities as well within that. Okay, so bring that data into the OneSource platform. Leverage it within your end.
Chop you off there, Josh. Sorry to interrupt. I know you.
No problem. Sorry.
No, that's been really helpful. And firstly, I'd like to thank Josh for jumping in today. I think the problem that we all have is that we all live and breathe this subject, so we can talk for days on it. But that was hugely helpful to whistle us through it. If anybody has any last minute questions, I've got a couple to raise, but I think it always, what I always like to see is the interconnectivity. Over the years, when tax technology's moved on, it used to be that people would buy individual point solutions, and now we are looking a lot more holistically about how things can connect, talk, and do more. And it's great to see the OneSource platform coming a long way to be able to kind of offer more and more of those. Couple of quick questions, Josh, from the audience. How does the software deal with different tax rules in different jurisdictions, prepare on income and corporate tax basis, etc.?
Yeah, sure. So from the provision tax reporting perspective, the system is a rules-based solution. So we would configure rules within it. So for example, it would look at the account code and say for, okay, this entity in the UK, we treat this as client entertainment, add back 100%. For this entity, 50% or 5% or so on. So that's generally how you configure the rules from a reporting perspective. We can go more than that around losses and automation and things as well, but that's how you set up the basis of the rules. We can then build in additional custom calculations to take that in more detail as well, which also goes back to my point about if we get the data, we sensitize that, we automate that, then the accuracy of those calculations that then take place in the reporting solution will come through more as well.
I think I'll just add to that, just to clarify the point on jurisdictions. Those rules can be set at global, jurisdictional, or entity level, or any variation in between.
Yeah.
Skill of the implementation.
Yes.
Yep.
Okay, there's been a couple of questions. Yes, we'll share slides. Yes, we'll share the links. All of the links and previous videos are available on our website and on our YouTube channel. Absolutely, they will be sent across to you. If there aren't any further questions for Josh, then we will draw a line under today's event. Thank you all very much for attending. I hope you'll find that useful. You will get an invite to have a deeper dive with Josh and Mr. Bacon to actually go through any additional questions that you would like to raise or see proper demos and proper time on this subject. I would actively encourage you to reach out on those and schedule some time. It is worth getting into a bit of detail on it. But thank you very much, Josh. Thank you very much, Ian. Appreciate everybody for joining this morning, and we'll see you in a month at our next webinar. Thank you, everybody.
Thank you, everyone.